Hi everyone, my name is Amanda Hermio and welcome to week 6 MPA 585 for economic efficiencies of property, sales, and income taxes. Alright, let's just dive into distortion effects of property tax. Property tax are particularly known as real property that is owned by individuals such as homes. This can have a very distorting effect on economic behavior. I'd like you to think of a scenario now of, imagining owning a home in the city of Monrovia, valued at $900,000. The property tax system typically takes the base of the assessed home value, which discourages sometimes homeowners from improving their own home property because of fear of increasing their tax burden, which is called the lock-in effect. If personal property, such as cars and business equipment, were also taxed in this way, people might be also avoid trying purchasing these types of items to maximize their use to ensure that they minimize tax goods, leading into inefficiencies in how resources are used. In both cases, property tax can reduce incentives for people to make productivity of their assets, which can hinder some economic development. This kind of comes into play in how tax policy works, essentially. So we can assume that tax policy can slightly impact housing affordability through several mechanisms that affect both the supply and demand, such as homes. So two key ways that tax policies influence housing affordability would be tax properties, the effect of home ownership of cost of goods. This is a direct cost of owning a home, and they are typically based on the assessed value of the property, whereas in areas of high property tax, some parts of California, these taxes can increase overall the cost of the home ownership, making the home less affordable for the middle or lower income households. Going back to the lock-in effect, higher property taxes may discourage homeowners from making improvements or selling their home, or reducing home mobility and limiting the supply of available homes on the market. This can drive up housing prices, particularly in areas where the supply is considered constraints. Another thing you want to look at is the impact of local services. Property taxes are often used to fund local services such as schools, parks, and public safety. Better services tend to increase property taxes and potentially driving up home costs, but they also can improve the quality of life, and which can also lead to much justified higher cost. Now let's look at distortion of sales tax. I want you to consider sales tax in California. There is a general sales tax that applies to all purchases, including consumer goods. A general sales tax can lead to a reduced consumer demand for tax goods, particularly among lower income individuals. For example, let's say you live in Monrovia and you want to go buy a car. Well, when you go to buy the car, essentially, they're going to go off the sales tax of your zip code of where you live, not where you're actually truly buying the car. Now, this will affect the factor of the sales tax because you're having a limited on their purchasing power, because essentially depending on how much sales tax is will determine how much of that car they can truly afford. And this can definitely distort effects in sales tax because, again, now it comes back down to, can the consumer afford this item? Because the item may be, for this instance of a car, $20,000, but because of the area code that they are in, sales tax moves that $20,000 car to now almost $27,000. And it comes back down to, can that individual truly afford that? And this sometimes can also discourage a lot of consumers from going out and purchasing those things. So again, this does limit their buying power overall. And now let's move on to the distortion effects of income taxes. Income taxes are particularly progressive income taxes that can discourage individuals from working more hours or seeking higher paying jobs due to diminishing returns caused by high tax rates. For high income earners, I want you to think of an example of, when steep tax rates might discriminate investments and entrepreneurships. Taxes on corporate income can also reduce the funds available for the growth of the business and also the innovation and creating broader efficiencies in the economy. For example, an individual is working for a corporate office and is asked to do overtime. Unfortunately, when they do overtime, because now they are reaching a higher rate of pay rate, they are getting taxed in a higher tax bracket than they normally would. So essentially, it diminishes the garnishes of wages down to what is left. Unfortunately, when that happens, it's almost like if the individual no longer is truly doing overtime. Now, this kind of diminishes the employee to not wanting to essentially do the overtime because it's not worth the income taxes that they may have to pay in the beginning at the first check when it's taken out, but then also at the end of the year when taxes are taken out for the annual yearly taxes. So those are certain things that you can consider when distortion effects of income. And it's very difficult on the individual who is just trying to seek a higher paying job, who's trying to do better, because it almost essentially makes it not really worth doing all that time. Now, let's debrief really quick, getting on to the perspectives on government intervention. I want to briefly look at how people with different views on government intervention might have effects on taxes. Number one being more government intervention. If we do this, supporters on government interventions might argue that property tax can provide stable funding, essential services like public schools, infrastructures, especially in the city that that individual lives in, who is benefiting from that tax, and especially when it comes to sales tax. These are seen as more effective broad-based revenue sources for state programs and cities. Income taxes, especially progressive ones, are often viewed as a tool for redistributing the wealth, reducing income inequalities, which may help fund social services and reduce disparities. Now, on the flip side, to look at less government interventions, on the other hand, those who advocate for less intervention may argue that property tax discourage home ownerships, economic mobility, and when it comes to sales tax, they might argue that this is more regressive, it hurts the low-income households. Meanwhile, they might see income tax, especially in high marginal rates, and desensitize work or investment, and thus hinder economic growth. For example, especially when it comes to high wage income earners, they might feel overburdened by the state or federal taxes, which could limit their financial contributions to the local economy. So these are kind of some key takeaways to think about when it comes to the perspectives and reflect on larger philosophical debates when it comes to government and when it comes to managing the economy and their intervention. In conclusion, just kind of going over again that property tax and income taxes and sales tax have a very unique disproportionary effects on the impact on the economy efficiency, but also on the individual. Property taxes may discourage investment in sales tax and can dampen consumer spending, and income taxes might, decentivize work and investment for the individual and as well as the economy that the individual participates in. So having these balances is very much required, and being very careful when it comes to policy designs and taking into action as far as what is equitable and what is efficient to not only to the economy but the individual as a whole. Just to give you that final perspective, taxes shape on how people spend their money and how they contribute to the economy. So when it comes to the government's role, it's definitely on them to support more or less the intervention to influence on how fairness is put across the board and effectiveness of different taxes. For homeowners especially, there has to be a very keen balance in between it, because not only are they paying the income and property tax, but they're also paying sales tax for wherever they live. So these can definitely have a definite big burden on them when it comes to taxes, because public services and everything around them goes into effect on how well the economy is stable.